Hello, everybody. Happy Thursday and welcome to Gold Rush Live. My name is Sam Gatlin. I'm an editor at All Star Charts Gold Rush, and today I am joined by Jason Perz. As always, Jason, what is going on today? Gold Rush
Hey
Live. My
Sam, give
name
me
is Sam.
1 second. I don't know why I'm getting
It seems like half the time we jump on these videos and Jason is having some technical difficulties, so this is nothing new for all
I
of you
must be getting
regulars
old,
around here.
Sam. I must be getting
Yeah. Everybody poke fun at him in the YouTube chat. I see you, Wavy McFly, DPS 888 in the chat. Frey Lee, what's up, everybody? We're happy to see you here. If you are watching this on Twitter, you can jump over to our YouTube stream where we can see your chat. But yeah, we have a lot to discuss today. Like precious metals are absolutely ripping. I don't know if you've heard, but there's a lot happening there right now. And there's a lot happening in the bond market that we want to talk about today. So let's get to it, Jason. The first chart we brought along today, we actually wrote about this for premium members to All Star Charts Gold Rush on Monday. And the chart is a monthly line chart of gold going back to 1968. And you can see in the lower pane, this is the consecutive months up indicator. And you can see it has gold has closed higher in 7 consecutive months once. It's done 6 months a few times, but never before has gold closed higher in 8 consecutive months. It just did that in August, and to me, this just speaks to the extraordinary demand there is around the world for gold. You see all of these headlines about XYZ central bank buying gold and dumping their treasuries, and the price is definitely reflecting that a fundamental driver right now, Jason. So, is there any other fundamental drivers that we should be paying attention to that's causing this extreme demand for gold?
Oh yeah, Sam, and we're gonna get to it. We got a lot of stuff to get through today. So talking about bonds, talking about real yields, talking about inflation, talking about the dollar. I mean, it all kind of leads us here to gold moving higher, even currency debasement. Fear of currency debasement is really what it is, and isn't the fact that the dollar is really going anywhere. It's the fact that people might believe that losing faith in the Federal Reserve, losing faith in your government, that happens a lot and it kind of drives the price of gold at times. It doesn't mean that this is the end of the dollar and we're heading towards the Ray Dalio end of the dollar cycle and now we're going to be lose our reserve currency status. Maybe that happens at some point. As a trader, like we can't really look at something that big picture. We need to look at what's happening right now. And what's happening right now is we're kind of headed that direction, but we don't know exactly where we're going to end up. But I really like the way gold's been moving. I think it's telling you about the commodity cycle no matter what. Any way you look at it, the commodity cycle is on. I don't know when oil's going to catch up. Oil, that's the biggest question. Everybody keeps asking it all the time. When's oil going to catch up? When's
Seems
oil
like
going
it's going to happen soon, Jason. I mean, it
It
looked
looks
really nice.
good. It looks good, right, Sam? It looks good. If we're looking at international energy stocks, they look good. If we're looking at XLE, it's even holding up well. Oil, not holding up as well, but the distillates, if we look at heating oil, looks really good. Up over double digits this year already. So I think we have this scenario here where energy could catch up. And everybody's pointing to copper. Oh, what happened to copper? Copper's not involved in the commodity cycle anymore. Copper in the United States went up and then back down in the copper futures. If you look around the globe for spot copper prices, you're seeing that they held up very well. If you look even deeper at each of these individual miners, whether it's US miners, global copper miners hitting new 52-week highs recently, BVN, We've got all of these copper miners all over the world that are just breaking out. Hud Bay is another one that's breaking out. So we have all these new breakouts across the board in these copper miners. The U.S. copper miners look good. Global copper miners look good. I'm not bearish on the commodity cycle at all. So I do think that energy will catch up at some point. It's just the when is the question. I'd say stay tactical. We did get 100-day high in energy. If that is your type of signal, take it. But really looking for that breakout. If we get up and over 100, get a nice weekly close up there, I'd be very bullish on XLE and the whole energy sector.
Well, you mentioned breakouts there, Jason, and over the weekend I was looking at thousands of monthly candlesticks, and man, the best candlesticks are in precious metals. Look at this monthly candlestick from the Global Gold Miners ETF. That's Ring, breaking out to new all-time highs. So this ETF went public in early 2012, right when the last precious metals bull market was ending. Gold rallied like 600% from the 2001 low to the 2011 peak, and then they brought out this ETF, and it went absolutely nowhere for over a decade, and now there are no bag holders left. It's just blue skies ahead for global gold miners, and not a new all-time high, but a new multi-decade high for the junior gold miners, the GDXJ. I mean, look at that monthly candlestick. That is an incredible candlestick. It opened at the low, ripped higher all month long, and closed at the high. Jason, I think next up is gold relative to stocks, the rocks versus stocks ratio. I mean, look at this big, beautiful base. This is a textbook bearish to bullish reversal pattern, and people are telling me that this rally in gold is extended. It's gone too far. You've seen 8 consecutive up months for the price of gold. But when I look at this chart, it looks like it's just now getting started.
No, I think so too, Sam. I'm reading the chat. Somebody put Ray Dalio is depressing. That's
He
funny.
is, man.
Uh,
Every time he comes on, he's just depressing. He's just, yeah, I mean,
the
I
end of
would
the,
be
I
a
mean, I
very
guess
sad person living like that.
there's a difference between running a fund, right? You're a person running a fund all these years, and then like you take a step back and really like when you go on TV, you're a different personality. And so it seems like he's just kind of been obsessed about this personality of warning that it's going to be the collapse that happens and all of these things. And by this point, like for him, like most of his assets are in things that are going to make him more money, whatever the scenario that comes up. So he's
Like his
probably just pounding
books.
the table
You
on
know,
it. Yeah.
he's just,
And
he's
not
just
to
trying to
mention,
sell more books, Jason. That's it.
and then he's definitely going to sell a lot more books. Like us being on here being like, look how bullish we are and us making money and helping other people making money. Like that doesn't sell books. What would sell books is if we said gold's going to zero and this is why, which is not true, but that's what people do on TV. And that's why I don't watch the news at all. I haven't seen it in many years. I haven't seen CNBC or Bloomberg or anything. Thank God. Those people are crazy. But anyways, no, I love the argument, rocks versus stocks. I think, we're in a scenario here where I think we're very early in the cycle. I think that, people are going to go, okay, that means that the Dow's got to go down or any of these things. That's not what we're saying here. If you look at 2000 to 2012 or 11, basically you're looking at a scenario where gold just outperformed. And that's all it's doing right now. It's outperforming. The market isn't just heading down. It isn't getting hit very hard. It's still in an uptrend. So we want to be long stock still, but we want to be long gold even more so because it's relative strength that we like to buy in these markets. So I think this thing could really take off here. I think this is something we're going to see into year end, or especially December, especially January, is where gold really outperforms stocks. And then the miners, Sam and I have been on here pounding the table that the miners looked so good, and everybody was like, oh my God, the gold trade is over. It's going sideways. It's frustrating. It's hard. And we're just sitting here like, wait a minute, our mining positions have just gone up exponentially. This
Every single trade we outlined, Jason, it just goes up. On Monday, we outlined a smaller gold mining stock, and man, it was right there at the breakout level, and right after we published the trade idea, it made a textbook gap and go to new all-time highs. But Like it's not that we're brilliant or anything, like we're good at what we do, but like it's more of like don't confuse brains with a bull market, you know? There's
Yes.
just an extraordinary amount of demand out there for rocks and the rock stocks. So I'm
Yes.
not fighting that trend. I'm riding that massive tailwind because life is so much easier when you have secular tailwinds at your back, like there are right now in precious metals.
I think that what you just said is incredibly important, which is, just being able to kind of know, hey, it's a bull market. Hey, what's going up the most? Hey, I'm going to stay in that sector. Like I looked the other day, I was floored by it. We looked at our returns the other day and made a post about it. GDXJ up over 90%, year to date. That's just crazy. Like it was probably like what, a month ago where we were like 50%. Wow, that's crazy. And then it was
Well, we
like,
have Wavy McFly in the chat here, Jason, saying the new Mag 7 is this basket of gold miners that he mentioned, and then there's the new Fang. Like all of these stocks are dramatically outperforming the mega cap tech stocks that have been leaders for, over a decade now. Like this is a new regime that we're in, Jason. These stocks are absolute beasts. Newmont Mines, the world's largest gold mining stock, has gone nowhere since 1987, but now it's pressing against that shelf of former highs, and it's leading the charge in the S&P 500 this year. The second best performer, only behind Palantir. Like, not only do I think we're early in this, but I think we've made a ton of money already. Like, uh, it's really exciting to think about, I guess, Jason. Like, these secular bull markets are incredible. There are fortunes made. Like, go back and study the 2001 to 2011 precious metals cycle. It went up for an entire decade, and people were calling tops all along the way, but it just kept on going. And we're in the very, very, very early stages of that cycle.
yeah, Sam, I think that's the thing that we have to continue to pay attention to here is the fact that we are in the early innings and there will be a lot of people who say something different or feel something different. And really, it's a look at history, look at the relative strength. And if the miners start to underperform, we're going to come on here and say something totally different. The miners are outperforming. That's telling us that risk on is in this sector. Silver has even joined the party in a big way. Silver's up in over $40. So as we continue to see these moves, I think this will all kind of continue to happen and turn into that commodity cycle that everybody's kind of looking for on here, which is starting to see energy really pick up is going to be the next thing. Like we started out talking about this early where we talked about the fact that gold was moving, gold miners are moving. This is what we want to own. And then we started talking about copper. And then we started talking about the fact that energy could pick up at some point. Now we're starting to see energy pick up. So really to me, I'm seeing the makings of a great commodity cycle. I think it'll continue.
I do too, Jason. Now let's talk about some bonds. So you brought along this chart of gold overlaid with the long end of the bond curve. So what's the read here? Is it just that gold trades inversely to bonds? Because that's kind of what I see.
Yes. So when we look at this, glass is always falling off my face. When we look at this, we're looking at this scenario that everybody's talking about right now, which is what's going on with bonds and gold. And I had a bunch of people ask me about this lately. Gold is correlated with bonds, and if gold's going to go up, bonds should be going up. What's been going on with bonds? And so I just made this on here to basically show that relationship did change recently. And why did that change? What's the difference in the cycle that happened in 2020 that wasn't a part of the cycle back in 2018? Well, inflation. Get back to 2020. Obviously, we started pumping the market full of money. We started pumping people full of money. If you had a pulse and you could basically cash a check, you got some money for either a business, just money just sent to you automatically, unemployment for everybody, whatever you needed. Oh yeah, add a couple bucks on that unemployment as well. Whatever you needed, you got a lot of money at that time. And that basically created that inflationary cycle that we see that we're still living in to this day. But that started basically taking a lot of money out of the bond market. We started having the currency start to get debased a little bit. We started to see the dollar actually fall at that point in 2020. It did bottom out in 21 and started moving higher. But that led us into this cycle where we're at today, where people have moved money out of bonds and into those rocks known as gold. And so as we continue to see that money kind of flowing into gold, it's really created this massive uptrend. Now, there's a bunch of reasons why, and we'll kind of dig into that a little bit more in on the next chart. But really, the best thing to look at here is the fact that as that relationship's changed, keep paying attention to it. On this chart, we're looking at real yields. Now, real yields are just the interest rate and the inflation rate. So once you take the interest rate and minus the inflation rate, you get the real yield price. So basically, gold loves real yields. And why it loves real yields is basically understanding that, hey, there's real yields falling is good for gold because we're basically talking about inflation. Once we start to see inflation pick up and also the bond market underperforming that inflation, it leads to more liquidity in the market, but the bond market is also hinting that inflation is under the surface. So you see when there was a lot of inflation, it happened quickly after 2020. You see that breakdown that Sam drew on there. That was one of those periods where you started to see inflation run into all these different assets. It was gold. Sorry, not gold. After gold went up, it topped out in August 2020, and then we started to see that move in energy that started in November of 2020. And so basically you see that shift happen. Now, this time, I don't think that shift's going to happen the same way where we're going to see gold get shifted out for energy. I think it's all going to be the same. And the reason why is that we're in this period of high inflation. Interest rates are starting to come under pressure, mainly from the government. I don't think they're going lower by any means, but I think that the inflation rate will still outperform the yield rate. So that's going to lead to gold going even higher at the moment. So I do think gold's going to move higher. I do think energy is going to move with it. The people who keep asking me, Jason, tell me, when gold's going to stop so I can start to buy energy. I think they're both going to go together. At certain points, one's going to outperform the other one, and so on. I'm assuming, once energy really gets started, money will start to rotate into energy, and we'll see that outperform. But I don't think there's any reason to start selling gold miners today. I think you want to stay long gold miners. I think you want to be open to the fact that I'm going to start buying energy as I get buy signals to buy energy.
Well, I keep going back to the 2001 to 2011 cycle, Jason, and that was an incredible time to own precious metals, but energy was also awesome, and it was the last sector to peak during the Great Financial Crisis. So, it might have been a little bit late to the party, but it was the last person at the party too. So, be patient with it. Uh, Energy stocks will eventually join the party, and when they do, it'll be incredible, and we'll be screaming from the rooftops about it. But for now, just stay steady long on these precious metal stocks because they are working very, very well. Now, Jason, let's move on to the next chart because I think this is something that not enough people are talking about right now is the global increase in 30-year yields. If you want to know what the US 30-year yield is going to do, look around the world. It's kept you on the right side of the trade this entire cycle. And right now, many of these countries are breaking out to new multi-decade, sometimes in some instances it's like new all-time highs, but either way, these yields are skyrocketing. I mean, look at this red line here. This is the most um, this one stands out the most to me. The British 30-year yield, look at that, absolutely skyrocketing. You see Japan, it's kind of hard to see on this chart, but Japan, that 30-year yield has gone parabolic. Yeah, Canada looks like it's next. I think the US won't be far behind these other countries.
Yeah, I think that one, you're right, Sam. If I could have highlighted this chart in a different way, I would have loved to show the fact that Japan has ripped so much quicker than everything else. Japan's yield just keeps moving up exponentially. Doesn't look like it's going to stop. Every time I think like, hey, I'm going to look at this and it's going to probably be consolidating or pulled back at this point, it just keeps ripping higher. So that's something to keep on everybody's radar. But the reason why you want to look at charts like this is to understand the fact where our yields are going. Most of the time when you're looking at central banks, they like to work together. It's not something where the central banks go, okay, well, the Fed's going to lower rates and therefore we're going to raise rates in the UK. Most of the time, if we're lowering rates, they're lowering rates and vice versa. And so most of the time when you see that in different countries in the longer end of the yield curve, it's going to follow it one way or the other. And all of these just look like continuation patterns. People will go, "Oh, the Fed's going to do this and Operation Twist and all this stuff." It's like the 30-year yield can do whatever it wants to do. And the amount of money that they would need to really run an Operation Twist at this point would be wild. So I don't know if they can really bring down the long end like people think. And I
And
don't think
Jason,
they're
can you
even
just tell us
focusing.
what an Operation Twist is for
So
those of us that are not familiar?
so basically we're looking at the idea after 2008 where they started to go, okay, well, the long end of the curve is not coming down. So we need to go to the long end of the curve and figure out a way to bring that down. Now that's not something the Fed's ever done, which is try to control the 30-year part of the curve. So bonds are very complex. So there's lots of different maturities. So you're looking at 3-month bonds, which are mainly what the Fed focuses on, the short-term rates, looking at 1 month to 3 months, even a year. And most of the time, those all follow the Fed. But once you get outside of the curve to that 5-year, 10-year, especially the 30-year, it can do something totally different, which is what creates the yield curve.
And that's
Um,
exactly what we're seeing in this chart, Jason.
yes. Yes. So this is where the spread happens. Now we're seeing that's the Fed rate and the 30-year Treasury yield. So now that the spread is happening, people think that, okay, the Fed's lowering rates, which means interest rates will come down across the board. And this chart just shows that that's not the way it goes. Most of the time, the Fed is going to follow what the 30-year is going to do. That doesn't mean like I think they're going to come in here today and start raising rates. I think that's basically political suicide for the Fed at this point. But I do think that the scenario we're in today is that look at the way that this started to move up the second they started to lower rates. So they started to lower rates. The 30 years started to move up. And I think that same scenario is going to happen when they lower rates today because under the surface, there's so much inflation. It's the one thing nobody can argue with us about. Like, you want to talk about you don't believe the commodity cycle or whatever, fine. But if you want to say like inflation isn't sticky, like you haven't been grocery shopping lately, you haven't been outside lately, you should probably go do that. You haven't shopped on Amazon lately, like you don't even have to go outside anymore. You could just go online and look at the prices. I mean, they continue to go higher. Buy a steak, it's $12 for a 8-ounce grass-fed steak at this point. I mean, it's just getting wild. So inflation is still there under the surface, and that's what Powell got so right this whole time, which is if I lower rates anymore, guys, we're going to see crazy amounts of inflation come into the market. And I really think that even the idea of them lowering rates is going to create more inflation in the market. Not to mention they're planning on lowering rates. The Fed the Fed probability tracker is saying that they're planning on lowering rates in September and
Totally.
December.
I'm looking at that right now, Jason. So
Yeah.
it's 12 days and 23 hours until the next Fed meeting, and there's currently a 97.6% chance they cut rates to 4% to 4.25. It's currently at 4.25 to 4.5.
Yep. So 25 basis points. And really that's all that needs to happen is them to cut it a little bit to see inflation start to take off. And this will start to end up in areas like energy. Like energy would be one of the things to really benefit. Another thing that would benefit obviously is gold. Gold's already been benefiting, but it would benefit even more. Copper will benefit. So I think the cyclical sectors that we're seeing in the market, whether it's global copper miners, energy, global oil stocks, which we've been highlighting some of those lately, like any of those are probably going to take off. And the dollar's probably not going to do well in that environment either. So I really think that this is a good time to continue to look at these different sectors in the commodity cycle and just continue to take these trades as they break out and as they come.
Totally, Jason, and we're already seeing that. This is the copper miners ETF, COPX, breaking out to new 52-week highs. This looks excellent. It looks like the beginning of a brand new primary uptrend after a big, fat, messy consolidation. And it's not just copper miners, but you can look at like rare earth and strategic metals. Look at this momentum thrust, Jason, on the 3-month rate of change. It's up 73% over the last 3 months, breaking out of this bearish to bullish reversal pattern. I mean, these stocks look like they're just now getting started. So it's at like 63 right now. I don't see why this couldn't go to the prior cycle peak around 120. And that's like a double from here and just the ETF. So like there's going to be monster moves under the surface. We've already seen stocks like MP materials skyrocket. I mean, that's kind of a special situation, but it's not the only one that's mooning. There's a lot happening under the surface in metals. It's not just the precious metals that we're constantly talking about here, but all kinds of different metals are working. It speaks to the breadth and the strength of this bull market for metals.
Yeah, I think so too. And I think that you really want to look at these different areas, understand that we're in an international bull market at the moment. And if we're in an international bull market, rare earths are going to do very well. A lot of the mining is over in Asia. A lot of the companies get their production out of Asia. I think that's probably going to continue going forward. And really, like, look at that whole sector. I mean, there's a lot of things under the surface. The lithium miners look good. Whatever you're looking at in that sector is really picking up. So that momentum thrust looks great. I'm sure it's probably going to continue. I'd be surprised if not. I think that thing's probably targeting 100 pretty quickly.
Totally, yeah. I'm in. Let's go. And Jason, let's finish off with this chart. Go back to the bond conversation for a second. So we have the US dollar in the upper pane here along with the TLT. So I think all of the evidence continues to suggest that we're still in a weak dollar environment and the Dixie's probably heading towards 90 very soon. You know, it's been consolidating here around 100 for several months now. When's the next leg lower going to come, Jason? Does it need the TLT to break down?
Yeah, I don't think so. Like I think it could go right now the way it is, but I think TLT breaking down would help it. But I mean, you have to think about, like, let's tie it all together to end this. So the original relationship between bonds and gold, they're usually inversely correlated. Inflation is usually bullish for gold. This is what people would tell you back in the 80s, 90s, and negative for bonds. Inflation going up is why you see bond yields going up. In the early part of late cycle environment, government bonds and gold can usually move up together. Easing can reduce interest rates and increase bond prices. But this also leads to concerns of what we talked about earlier, which is currency depreciation. And so when there's concerns of currency depreciation, you start to see that happen where money starts to flow into these different areas. Now we're seeing money flowing into gold. Now money's flowing into these different areas, even international stocks, because it's trying to get out of the US dollar at the moment. So that's the opposite of the normal relationship that usually happens. So once we go back to that and just look at it and go, okay, what's going on with bonds to the dollar? People usually go, well, if bond prices are going up, that's good for the dollar and vice versa. The way I always learned it back in the day, which is when before this correlation ever started, is that bond yields going up was good for the dollar. Which nowadays people would say that's not good for the dollar. Look at the dollar right now; it's moving down. So bond yields, one, correlations change over time. So that's the first most important thing to know about here. But two is as you see the yield started going up, you started to see the dollar start to catch a big move, and that was in 21 through 22. And then as we kind of came back into that environment, inflation kind of came out of the picture for a little bit. We started to see that the dollar just kind of consolidated, went sideways for a long time. And then inflation came in back into the picture. International stocks started to pick up again. Gold miners have been ripping all year long, up, nearly 100% already this year. And then the dollar really collapsed. And then if you look at the bottom of it, you're looking at bonds, and bonds are not holding up well either. So I think that this is a exodus out of US dollars and US debt at the moment. And this is very good for our precious metals positions, very good for our international stock positions, and very bad for bonds. Like, I think I still think we're still seeing a bond bear market. Everybody's looking for bonds to bottom here. I am not. I am on the opposite side of that trade. I keep getting people who comment to me about the fact that there's all these, people on Bloomberg and CNBC talking about yields going higher, and I'm like, I haven't seen one of these people, Sam. I don't know where those people are at. They're not talking to me. I keep going on like and looking and searching for these. I keep telling people send me links. Hey, send me a link. I want to see these people who agree with me on bond yields going higher on the long end of the curve. I'm just not seeing it.
I
So
just see people crying about the housing market and how nobody can afford a house because the mortgage rate is so high. Like I'm in the same camp. Like I want lower housing prices and lower mortgage rates so I can get involved. Like I don't own my own house, but it is what it is. Like that's just not reality. I'm gonna stay here and profit from yields rising and that sparking um, an epic bull market in precious metals and oil and all kinds of commodities.
yes, so we need to stay on the side of making money, and that's really what we
Totally.
do here.
The
We're
market
staying on
doesn't
the side of
care
making.
what we want, Jason.
Yeah. I would like a lot of things, and they're much different than the market wants. But however, it is what it is. I don't want inflation to happen. Inflation sucks. However, I'd rather make a lot of money, whereas so inflation doesn't bother me or my family, instead of being in this situation where I'm going, I wish it was different. You know what? I really don't like that inflation's happening, so I'm going to short gold here. Like that sounds cool. It sounds noble, even if you convince yourself of that. However, it's not very noble to not be able to afford to eat. I'd rather be able to afford to eat. I'd rather be able to afford to have my normal life, and I'd rather make money from the commodities cycle. And honestly, like it's an exciting time because not everything moves like commodities. Like we can make a lot of money right now as long as you're smart about it, really ride these trends, and really play this the right way. And that's what we do here at the Gold Rush.
Totally, yeah. So we didn't really mention any trade ideas on this show today, Jason. We're just talking more high level, big picture macro. But if you want our trade ideas, you can become a member of All Star Charts Gold Rush and get access to every single trade idea that we have inside of our proprietary rangefinder platform, which is really sweet and it helps you. I mean, you can do a ton of things with it, but one of my favorite is to just, do a simple scan for like our Gold Rush universe, which trade ideas are closest to the entry. And you can look at the trade ideas that have the most potential upside. You can do all kinds of things like that. It's super duper helpful, and there's nothing else like it out there. So, yeah, if you're looking to profit from this commodity super cycle, I don't think there's anything better than All Star Charts Gold Rush, which is only $12.99 a year. And if you don't like it after 30 days, you can get your money back, no questions asked. But yeah, Jason, we're crushing it.
Money's getting made. That's the at the end of the day, like there's a lot of people who talk about trading, and like I've been in the industry for a while and working with funds and working with individual people. I've even had people pull their money out with me for buying energy stocks. People feel certain ways about things at times. However, like our goal here is to make money for our clients. Like if I could do anything well, it's teaching people how to trade, and then Sam and I figuring out what trades you want to be in to make money. And we cover it all. We cover energy, we cover the energy stocks, we cover gold, obviously the gold miners, we cover copper, obviously the copper miners, international stocks. Like there's a lot of stuff we tie in together, bonds, currencies, whatever you want to hear about in the macro space, we cover it. So the Gold Rush is a great product if you want to learn how to trade and lots of different ways to make money in every different market environment. Like that's the thing about it, which is we're long gold right now. There might be times where we're short gold. I'm short bonds at the moment. It doesn't matter to us. We're just here to make money for you guys and show you guys how to trade this market going forward.
Totally. And if you don't believe us, ask Frey Lee. Just said he joined All Star Charts Gold Rush and is loving it already. Thank you for joining Frey Lee and being an advocate for All Star Charts Gold Rush because we're really passionate about this and we think we can make a lot of money for all of our subscribers. So, yeah, check out the link in the description on YouTube if you want to learn more. You can also go to All Star Charts and see all of our work there on the blog. But that's really it for today. We hope you all enjoyed this show. We will be back at the same time, same place next week for another Gold Rush live video. But we really appreciate everybody being here. Shout out to Wavy McFly in the chat, always super active in the chat. We also have Frey Lee and several others. You guys are awesome. We really appreciate you being here. We hope you show up again next week for another episode of Gold Rush Live. But yeah, that's all we have for today. We'll see you then. Adios, everybody.
Later, guys.